Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, our tourism industry is facing a huge increase in demand. But first, a slew of factory reports were out overnight, and they showed that the cooling global economy is having an impact on the factory floor. One report showed the rate of expansion in US factories slowing, another showed it holding its own after a fall in the previous month. Its immediate prospects look quite good, however, after car companies there reported a banner sales month. The Eurozone factory report also kept up its healthy growth, as did India, while China's factories contracted sharply. Japan is still expanding. Even though many of the developed countries are still expanding, most of the factories in the emerging economies are not, and that is the reason the global factory outlook looks quite dim. In fact, the WTO cites China's factory sector as the main threat to growth in world trade. Soft demand for minerals hurts Australia a lot, but they have just said that the market is now at its bottom and will rise from here. All their bets are on China's factories rebounding. In Europe, and in an echo of the VW emissions testing fraud, it seems that Samsung may be guilty of something similar in the energy efficiency scoring for its TVs. And in a report out yesterday, it is clear that our tourism industry is in for a sharp period of expansion, especially from China. More than 100 million Chinese took an international trip last year, up 11%. And Oceania was the destination for more than 10% of them. The eye-popping detail shows that only the southwest of China has a travel bug so far. When that spreads, the numbers will grow very fast. We'll need big growth in accommodation facilities and other tourist infrastructure to handle this trade. Tourism is set to be our biggest export earner for some time to come. China is on a week-long public holiday, and don't forget that it is a public holiday in Australia on Monday, their Labour Day. In New York, the US Treasury 10-year yield is falling again today. It is now 2.03%. The US benchmark oil price is basically unchanged, now just under $45 a barrel, and Brent is just under $48 a barrel. Despite falling rig counts in the US, oil production keeps holding up to many people's surprise. And the Mexicans have successfully auctioned off 3 new potentially large production areas. High production and low prices will be here for a plannable future, it seems. The gold price is unchanged at $1,115 an ounce, and the New Zealand dollar strengthened overnight, although it is retracing some of that again now. Is at 64 US cents, 91.1 Aussie cents, and 57.2 euro cents, pretty much where it was at this time yesterday. The TWI is at 68.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.